Good gentlemen and ladies, how are you? An FX update. I'm doing FX generally on the longer time frame view because I'm not coming over here as often because we've been really active in the crypto markets. But round about, we got 3,000 odd views, and we warned that dollar would become strong. It was our take that dollars would be strong and that it could even be lean on the precious metals, which would not help Mike Maloney and Peter Schiff's business of selling precious metals. That was the monthly chart on a Euro USD. So this is a larger monthly chart. We were highlighting that we'd actually had a rally to a previous key level of significance that was around here on the monthly chart. You're starting to get two periods of selling wicks. It might be a little bit small. Make it big. Make it big, man. So a little bit of selling wicks over there. That was the call, as I say, roughly a month to 5 weeks ago. Then let me mute as well. We'll skip on till we drop into the lower time frame. This is now into the weekly time frame, and we're highlighting this larger area. Again, how it was a key level and how it was also a little bit of a bounce spot and a little bit of a gyration spot over there, and suggested potential reversal for the Euro USD, aka the Euro would weaken and the dollar would strengthen, which was ironic because many people remember not so long ago Donald Trump sort of not really shaking Merkel's hand and complaining about BMWs made in Mexico. You might remember that narrative. So if we keep dropping down the time frame, you'll see the next chart was showing this kind of structure, and that's that same line leaning over there, and that this was a sort of a last HVF in a final blow-off high, and that we'd have movement down on the dollar. You've got to remember you could have had the Euro USD short there at 125s, 124s, and the 123s level. It was just sub the 123s at that point. So that was the clip, and we also took it down right the way into other charts, such as the precious metals and all of them. I don't intend to show them all to you, but what I am going to do is just give you the update on that in terms of the dollar strength call on those Euro USD charts. Let's get back on the Euro USD, shall we? So that was where we last left off. I think, where are we with the Euro? Help. I'm into all my cryptos. So here we were with the Euro chart. That was at upside HVF. That was the falling wedge that gave the pop up for your second impulse. And there you go. You would have had a funnel over there. That was the whole period of what we call first inverted in the new trend, which made target and continued to perform beyond. Now, it's worth noting that we are now at a key level on the way down, and you might get a short period of rally. The key round number, let's just go for the 116 over there. Logical, make it round, must be a level that has been run by both downsides and was significant and reacted to. It was reacted to here on your falling wedge, and you've come all the way down, and now you're getting a hammer. You're getting a hammer. So I took snaggered images of this just to capture, and let's see if we can get those up. Here they were. I've put this, let's just make it a bit bigger. Put this in view here in a snaggered image, and what you've essentially got is you have had a hammer before, and you did have a little bit of resistance on the funnel zone. So bear in mind you would have had an HVF funnel coming in here. You need to drop the time frame to see it. It would have been an upside one, so that's a green zone roughly in there. But you hammered on it, but then it continued to the downside, and that's what happened. So we now have a larger hammer, and we are closer to this zone here, which was relevant before. So that's a little bit about the euro and what's happened. As I've said, you could have been short 124s, 123s, traded 116s on the FX, and now you've got a little bit of a hammering. That's green body's gone to red body. Everyone got a bit excited on the non-farm number. So further dollar strength expected there. And it kind of dipped further, but then it kind of rallied, and now it seems to be dipping again. So this is weekly time frames, big time frames. What could be a scenario here with the euro is a weak rally shoulder, because there's not much to cheer about over there. and they're just keeping quiet on the Brexit. They have a strategy on it, and they're allowing the guys in charge to mess it up, I suspect. So there might end up being a last minute deal rammed through in March, and everyone will claim a moral victory, and Britain will essentially have rolled over by a bunch of remainers. So that'll remain to see. But anyway, nonetheless, weak shoulder, and we could get further weakness out of the euro. In other words, this was a strong and very consistent trend. Look at this trade call, guys, weekly. 1, 2, 3, 4, 5, 6, 7 weeks, every single one of them red. That is perfect if you'd got short, by the way, and you could have just made money every single week. And the first two exceedingly so. So it would have taken you well away from your stop, given you emotional comfort, and it could have been set and forget. Now it might push back a little bit, and that's what the wick might be telling you. And that could be a scenario. It could reverse and go up and set up an upside continuation, but I'm biasing to this being new trend continuation. It's been quite strong. It's only natural after 7 down weeks that you get some form of rally, but I wouldn't expect it to be overly buoyant. Look at that volume, each and every one already on the down day. So let's have a peekaboo at the good old GBPUSD. I almost started bringing the yen into that, apologies. And that would be your neckline for what was almost a tweezer top here. And I'll grey those out actually by preference there. That was your top. This would be probably a neckline, so I should do it. I'm going to do it as it in red because it's a potential bearish event on the round numbers, and that would have been a level that was both run by both. Covered this in our webinar today, actually, utilizing key levels of significance. You'll learn a lot more about that if you see value in it. Go to the website and see if we are for you. But anyway, completing the target is the criteria, and out you get on the purple level. So as you can see, very useful. She've actually had essentially a double top, slightly aggressive, slide through the middle of the circle. Please, Francis, I'm doing this rough draw, so it wouldn't have been that as close as initially appeared, but still a great close on the wick. Again, 1, 2, 3, 4, 5, 6 weeks in a row. This one right for the rejection you could have got in early, so I did a snagger draw for you on that as well. And that was the GBP. The look one way, go the other way candle feigns all the support and resistance, guys. In new high, they charge in, turns around, smashes it down, major exhaustion, bullish, bearish engulfing. Let's get that right. Bearish engulfing, he says again, one more time, bearish engulfing, and that is the end for the bull rally on the GBP from a much higher point after making the final HVF's target, a little bit of a dip down, and that's where it kissed the level and tried to move higher. Just moving that shape out the way, you can see that that's an engulfing. And maybe I'll incorporate that little green so we don't squash him entirely in the box, and then you go straight into the selling, which is powerful if you're on the right side of the market. Very, very powerful. And shorts can be awesome, guys. It's a skill to be learned. Markets fall differently, and crazily enough, even in Forex, where it's just one versus the other, that still appears to be the case. So it grinds in one direction, mainly because it's the USD. So down, down, down. Also a little bit of hammering. Let's have a look at how it's done now that the non-farm number settles. I drew these just in the lead up prior to the non-farm number coming out. Wasn't it interesting, just by the way, to see the Bitcoin smash down half an hour before the optimistic non-farm number came out? That was the smash down half an hour before the great news came. Anyway, back to the live chart. Again, still a green candle. Is a bit of a rally and gumption in the GBP. Again, how bullish do you want to get with this whole Euroland Brexit story? It should be a good thing to be getting out, but I don't think Britain will really be allowed to escape. I think a really bad deal is being baked. That's why the Europeans are being kept quiet and told to shut their mouths. And behind closed doors, the media coverage of how it's being conducted is dire. In other words, our expectations are already being managed exceedingly low, that we could be sold a right pup and just be grateful that it's over. Anyway, so my expectations, serious divorce bill coming Britain's way. Look at that in terms of what happened. Not a super strong trend, but you did eventually get a little bit of spring in your step over there, and that's where the setup came. That target would have been made, and you can drop down the time frames if you know what you're doing and you're an HVF superstar. Go to the website, find out how to become one, and you can get your target there roughly at the round number. But yeah, so double top, tweezer top, falling wedge here and up. Very similar kind of structure, not exactly the same as the euro, but this is all about dollar strength and putting the power back into the dollar, which is why oil having moved up is particularly significant in that environment. Yep, so that's your update on FX. What could happen next? In other words, the review that called, and as I've said, this selling candle was an absolute, the minute you engulfed there, you could have got short at 140, and you could have run and taken your money down to 132. 729s. So yeah, there's around 800. They're both at the 800 900 mark, so you could have taken 800 pips out of that and just relaxed and picked up just about 100 150 pips a week in the good weeks, and then a quiet week there, a flat week there, and you would have been out on this week before the week was up, so you wouldn't even have spent a full 7 weeks in. You would have been out part the way through as that pushed through on your target. We'll see what happens. I think the euro's in worse trouble, but I don't think the pound can escape at all. That's not a super convincing deep wick, so I think it's a moderate reversal rather than a really massive snapback rally reversal. So I think you're in a similar place as the euro, with a potentially marginally better grinding up move. You could then end up with left shoulder head, and you can have a nestled head and shoulders in here for a further downside move later when the drama heats up again. The alternative is you get fairly impulsive and you get a nice continuation squeeze, and then you push up. Just not seeing it out of that little hammer compared to the violence of that rejection. So that's my take with my minor bias there. Rallies to come for GBP and euro potentially, but not high conviction ones, and eventually shorting into them at the right appropriate moment at a technically determined level could prove quite fruitful for the long-term, smart, self-determining trader who owns the trade. This is not advice, this is entertainment. Go over to themarketsniper.com if you'd like to find out more. We did a longer, much more detailed version of this in our 3.5-hour webinar today on non-farm, as well as all the other markets of interest, and you can find out more about how you can become a premium member with us and be taking money out of one of the most liquid markets in the world, aka the Forex market. Okay, all good. Thank you for that. You don't always win. You'll never always be 100% correct. It is a probability game. Enjoy your weekends, and thanks for watching.